We're half an hour from the Open in Hong Kong, Shenzhen and Shanghai. You're watching The China Show. I'm Avril Hong in Singapore.
Happy Friday. I'm David Ingles here in Hong Kong. Let's get to your top stories today. Stocks across the Asia-Pacific are poised for a fifth day of gains. You have tech leading the Nikkei index towards a record high. We're closing in on that specific threshold. The dollar is set for its longest losing streak in more than 1 year. Now, President Trump names his chief economic advisor, Miran, as Fed governor, as Chris Waller separately emerges as the favorite to replace Jay Powell. And as always, recently at least, trade in focus as the U.S. says it is close to extending its truce with China, while India's Narendra Modi plans meeting this month with Xi Jinping takes on added significance. Right, welcome to the show. Happy Friday. Full session away from the weekend. If you're a glass half full kind of person, that means we're closer in on Monday. But anyway, we can talk about that on the other side of the two-day weekend, where we have, by the way, CPI coming through out of China on Sunday. We'll talk more about that. Chinese media suggesting that this window is open for a triple R cut. All right, the Asian benchmark, 0.7 to 1%. We've had some changes to the benchmarks as well, which we can get to later. So all things equal, 5 straight days. A lot of the gains we're seeing now, when I say now, maybe the last 30 minutes has really been coming through out of Japan. Maybe Taiwan right now, which is also, by the way, closing in on its own record high. I think we're now about just over 1% away on the TAIEX, even with the gains we're seeing right now. TSMC, up in the early goings, about 0.4 to 1%. That's a record high already, by the way, on TSMC. Flip the boards, please. The approach to the Chinese Open today. So we're going through some earnings today, and perhaps more so next week with Tencent. But yeah, you had the big semiconductors out. Some on the autos front, like Dongfeng Motor, which is up substantially, although you do have some fairly unfavorable guidance are coming through out of the company. So we are down in futures right now. We have a 30-year bond auction today. I think it's a 7 and a 30-year bond auction today. And of course, we have the CPI print, which we mentioned earlier on, coming through on Sunday. The story in the dollar is one where it's resumed its weakness, I think 5 or 6 days. In the Bloomberg dollar index, big move on cable overnight. You had this interesting revote on the Bank of England. So rate cut, but rate cut and then what is the question right now. So the path forward for the Bank of England, a bit more muddied at this point in time. Very quickly, we talked about Japan, really at the center of the current rally topics. Nikkei and the stocks on your screen leading to those gains right now. We're now 11% to the upside on SoftBank, and of course the other car makers reporting post-close on Thursday. So at this level, we should be about 1% away from the high that we hit, I think, July of last year. Beyond that, we've never been at these levels here for the Nikkei 225. So yeah, we are looking at potentially a new record over the next, let's call it 1 or 2 weeks, assuming we get there, of course. Avril.
Yeah, and on this Japan stock gain, it's being fueled by earnings deliveries, right, from SoftBank, from Sony. But also we have Japan saying that the U.S. has confirmed that they won't be stacking these tariffs. So that's another tailwind. And if you look at tariffs, of course, part of the conversation is what Besson has said on China, that, you know, these tariffs could still be on the table, as he addressed concerns about China's buying of Russian oil. At least for now, we have the likes of Lutnick talking about how on August 12th, maybe beyond that, we see another 90-day trade truce extension. Of course, when it comes to deadlines, we also have Trump having given Putin that deadline for a ceasefire of sorts, or an end of the conflict in Ukraine. And he has been sounding quite disappointed in the Russian leader. Have a listen.
Is your deadline still standing for Vladimir Putin to agree to a ceasefire tomorrow, or is that fluid now?
It's going to be up to him. We're going to see what he has to say. It's going to be up to him. Very disappointed.
Yeah, so, I mean, So I was looking through the big news overnight. So there's that, of course, Avril, and then the Intel story, I would say almost out of nowhere, came through. I think when you look at the stock, it did, of course, and clearly off highs of the day. So let's start things off with what the president had to say. And effectively, we have to look into, and I'm paraphrasing from his perspective, we have to look into the Intel boss's ties with China. After which, of course, and he says, thank you for the attention to this problem, after which, of course, we did get a statement coming through out of Intel itself, and they're saying we are still committed, of course, to the Made in America. I'm paraphrasing that as well. So we'll try to understand this even further, because when you look across the Asian equity complex, there are a lot of companies that are tied to Intel's fortunes as well. And just to underscore the statement coming through here out of Intel and the board there, what they're saying is, are deeply committed to the national security of the U.S. and the integrity of our role, of course, in the U.S. defense ecosystem. So that's story number 2. Story number 3 to get through as well is the Fed, right? And the softness in the dollar. 95% probability right now, Avril, priced for a cut in September. And of course, the personnel changes, and 2 names, of course, Stephen Miran, number 1. Who, by the way, also talked about Chris Waller, who might, of course, be now in a conversation to replace the Fed chair. In fact, let's have a look at how Mr. Miran talked about Mr. Waller.
I think that Governor Waller has really built up a really impressive track record, not succumbing to the tariff derangement syndrome that many others throughout the country, but particularly at the Fed, seem to have succumbed to. And he's done a really good job having an independent voice, which I think ultimately is proven correct.
Okay, let's start things off by talking about what this means for the path of rates around the Fed. Johanna Chua is with us here on set, head of EM Economics at Citigroup Global Markets. Good morning. Nice to see you.
Hi, good morning.
So lay out the call from Citi here on the Fed, and how do personnel changes affect any of that, if any?
Look, we've always had this view that the Fed will resume cutting in September, and then we've consistently had this view that the labor market's going to slow down and it's going to cut every meeting for at least 5 consecutive meetings. And I think the data that came out on the non-farm payroll pretty much bears that out. And obviously, we were even surprised by the backward revisions. So I think that always was in place, just given the fundamentals of the economy. Of course, one can worry about the inflationary pressures of the tariff and how that's going to impact goods prices. But what we're seeing in the data is services inflation has been coming off. So even though there is some price pressures on goods, it's not enough, I think, to change the trajectory of the Fed. So I think that's really a major driver of our call, the fundamental developments in the U.S. economy. I wouldn't say this latest round of this FOMC kind of is really a major driver at this point. I mean, I think, it's not a surprise that they will choose, if the Kugler resignation was a bit of a surprise in terms of being earlier than expected. But again, and obviously Miran feeling that Chua will probably add a bit more of a dovish tone. I mean, you heard him on the interview. He's clearly not a big buyer of the inflationary consequences of tariffs. But I think the Waller news, I think it will be taken a little bit more constructively, because I mean, Waller's already been in the FOMC. He's a known element. He's a respected economist. So, and he wasn't, I mean, he recently has been more dovish, but he hasn't always been a dove. And he's been in the FOMC since 2020. So I think that tells you there'll be a little bit more reinforcement of independence. Yeah,
and of course the dissent, of course, which Mr. Waller, of course, in the last meeting. What does it mean for the path of the dollar, which has somewhat resumed its downward trajectory recently?
So we are of the view that the dollar will continue to resume its weakness. I mean, obviously, the latest round of tariff bonanza that happened and all this noise on the BLS, et cetera, further reinforced that. But really, the main driver of the dollar weakness is, again, we expect the U.S. economy is going to continue to slow down, even slow down a little bit faster than some of the rest of the economies. And so from a growth differential momentum, and obviously the Fed, a further repricing of Fed easing beyond what is currently priced in could further support a dollar weaker view. Of course, we already had a big repricing of the Fed, but I still think there could still be a little bit more room to go.
Do you think it could be in the form of a bigger cut, like a 50 basis point?
So at this point, we're not expecting a 50 basis points cut. It's not impossible, but we would have to see materially significant deterioration in the data. So, we have to have a big surprise, maybe a negative payroll print or something big, like a big increase in unemployment rate that's coming up to justify a big move in September. But for now, I think, our expectation is there's still pockets of resilience in the economy. Labor force participation having declined is keeping unemployment rates relatively stable. So we think probably a 25 basis points cut, a more cautious stance is probably warranted.
Talk to us about how you think this Fed is going to be viewing inflation? Do you see it as potentially tariff hits coming, sort of one-off or in waves? And how will they approach the issue?
Look, I think obviously the moves that we're having on tariffs is unprecedented in scale. So I think the latest round of tariff estimates from the Yale lab suggest after this whole latest round of tariff, basically tariff increased in the U.S. to up to like 18 percentage points. So obviously it's kind of the highest, in almost 100 years, right? So we have to see to what extent that's going to pass through. Now, obviously it's taking a bit more time that will kick in. And obviously there's some offsetting effects on services inflation. But I think I understand that's part of the reason why the Fed will probably be a little bit more cautious in kind of front-running very, very aggressive cuts, just because, we have to manage how inflation expectations evolve. But look, I think it is, there's going to be some impact. There's going to definitely be a pass-through. It's not going to be true that a lot of that would just be absorbed by the exporters. And furthermore, what used to help mitigate the inflationary impact, especially under Trump 1.0, was a stronger dollar. But this time around, you have a tariff increase, and at the same time, you have a weaker dollar superimposed on top of that. So that obviously is something that we need to watch out for. But again, we're not too worried from the overall core inflation reading because, as I said, other components of the CPI, like services inflation, has been coming off.
All right, Johanna, we'll have more on the tariff conversation in just a bit. Stick around. Head of Emerging Market Economics at Citigroup Global Markets, Johanna Chua, with us. Coming up as well, we look ahead to this month's summit between India's Prime Minister and the Chinese President, now taking on added significance as Modi's relations with the U.S. sour over trade.
Okay, and the sun is finally out as we go into this weekend. It's been a while, actually, since we've been gliding into a weekend with really nice weather. It's still hot, though, out there. 18 minutes away to the opening bell. Futures are called lower, 0.3 at 1%. 18 minutes away, as we pointing out. Shanghai, Shenzhen, and here in Hong Kong, this is the China Show.
You're watching The China Show. A couple of things that we're watching in the session today out of the Greater China region. Of course, yesterday we saw yet another session of gains on the Shanghai Composite. This is a pretty strong rally against the backdrop of the onshore market turnover that topped 1.8 trillion yuan just a day ago. Aside from that, watching the sale of 7 and 30-year bonds, CGBs, ahead of a weekend where we're going to be getting CPI data, and then, of course, the digestion of MSCI changes. A couple of themes underway there, including on consumption. Some of these new consumer plays, I think, are being added into the China index, and then some earnings to watch out for as well. And the big movers, including New World. That's something else that we are keeping an eye on, given that speculation about financing. New World saying that there has been no offer from Blackstone, David.
Yeah, no shares were issued to anybody. And, of course, that was the report that then led to, I think, almost 20% at one point on shares of New World. I'm looking at the pre-markets right now. Nothing to suggest that the stock's going to go the opposite way. I mean, we'll find out really in about 5 minutes or so. Of course, we talked about Xiaomi and Cathay Pacific, which are separate, but related stories of the stocks, of course, continuing to see declines right now. So a couple of things before we go into the weekend, right? So we have trade numbers, in case you missed that, out China yesterday, number one. And number two is we have inflation coming through on Sunday. So just keep an eye on that, and really what all these what the tariff headlines might look like this time on Monday, which is obviously a daily developing story. To help us wrap our heads around, take a step back, right? Effectively, where are we on these tariff rates comparatively between these economies? Still with us here on set, Johanna, Chua, head of Emerging Market Economics at Citigroup Global Markets. So you guys put out several pieces on, number one, I think, the payback we're seeing of all that front loading on trade, and the other piece, of course, is eventually how tariffs eventually settle and what that means for competitive trade. Just help us understand what you guys are thinking here.
Sure. I mean, as you know, a lot of Asian economies reported better than expected, first half GDP growth, especially in the second quarter. And as you know, we saw a lot of export front loading. When you look globally at the major trading partners of the U.S., the front loading was really most obvious in the electronic sector. And it was very obvious in a lot of the Asian markets. And so what we're seeing, one of the things that we were speculating is obviously in an environment where, we're starting starting to see signs that U.S. economy is slowing down, even potentially faster than expected with the payroll data. We were already expecting a payback effect. If U.S. economy continues to slow down, that will even be potentially more magnified.
Yeah.
So we've been tracking, for the last couple of months, we've actually been tracking a lot of the data to assess where are we starting to see the payback effects on the exports. And where we're seeing it, we first started to see it in Singapore and Malaysia, but then recently we've also started to see quite a bit of payback effect on Thailand as well. So again, the view is that could continue to go. And recently we actually just moved our central bank rate cut call in Thailand a bit earlier to next week, to August, partly because, not just because the inflation was very benign, but just because we think the growth headwinds are growing. So that's something that we need to watch for the region, obviously going into the second half. And then the other thing that really was a bit of a surprise is the tariff differential story. I mean, if you remember when Trump was campaigning, for presidency, he was saying, 60% tariff on China and then 10% for everyone else. And as you know, there was a big narrative of like diversification in your supply chain, moving to ASEAN, even India as the alternative. But I think Trump came in and sort of surprised at the breadth of the tariffs, kind of hitting across so many countries. And in the end, it escalated significantly on China. But as you know, China had a lot of leverage and it de-escalated quite sharply. Right. So it's kind of ironic. I mean, when you kind of look at the landscape of tariff, I mean, the India was a bit of a, it was a big surprise that there was an additional 25% threat. Now, we don't know if that's really going to happen, subject to all these Russian negotiations. But if we calculated that if the extra 25% for the Russian imports kick in on India, the additional kind of effective tariff rate on India, after carving out some of the exemptions, is going to be something like 42.4%. Wow. Which, if you compare to China, China had the 10% reciprocal, 20% fentanyl, and then the previous 11% from Trump 1.0. But then there's a bit of carve-outs. We estimate the effective tariff rate in China is about something like 40.5. So it would be really ironic when people were thinking India was the alternative hedge of China, that the effective tariff rate would be higher on India. Now, again, we're not expecting that will happen, but this narrowing of tariff differential kind of really creates a lot of uncertainty about supply chain diversification. Right. I mean, even ASEAN, right? ASEAN had a lower tariff. I mean, it seems like rather than hovering close to 10, we're talking around hovering close to 20.
High 20, yeah,
of course, with a lot of exemptions, so that probably takes the effective tariff rate down. But remember, we have this 40% for transshipment, and we don't really quite know what this transshipment really means. But depending on how it's defined, if that is really driven by targeting China rerouting, well, then why would you reroute to ASEAN if it's 40% when China gives you kind of equivalent? Right. So again, it kind of changes the relative competitiveness at a time when, as you know, Chinese exports are already so competitive. So I think this creates a little bit of uncertainty, more uncertainty of the trade policy. And I think that, again, further kind of creates more risk to growth in the second half of this year.
And how does so China released trade numbers yesterday.
Yes.
And how does that then inform you on probably who comes out as an early winner in terms of, to your point, right, in terms of competitive advantage, it doesn't seem there's a big difference now, effectively.
Not as big as we had thought. And I think China was so competitive. And you're seeing in some of the export numbers in China, I mean, obviously, it's been quite, of course, it's slowed down, but it's really been a lot more resilient than people had expected. Right. And initially, it was driven by a lot of, strong exports to the rest of the world. Part of it was kind of supply chain rerouting as China's export to U.S. kind of slowed down. But in the latest round of data, you're starting to see some signs that China's exports to U.S. are kind of bottoming. As other economies are seeing a bit of a slowdown. So it just tells you how resilient it is. And if it's true, let's see what happens with this 90-day review. Right. If it's true that we do get another 90-day review, that kind of creates a little bit more of a stable kind of environment for tariff. Yeah. And remember, when you get to 90-day, you're talking November. And a lot of people are potentially talking about a Xi-Trump summit in APEC in November. If that happens or not. So, again, these things are still evolving. There is so much uncertainty on how these tariffs are going to evolve. We have to also remember, we're so focused on tariff differential, but just the uncertainty is so large on tariff because we don't really know how long this is going to end. That's also going to create a lot of drag on CapEx. And if CapEx continues to slow down, and we're seeing signs of that, CapEx is a very trade-intensive kind of activity. And in the latest export data and trade data out of Asia, we did see that capital goods imports have been slowing down.
Right. Johanna, you talk about that potential Trump-Xi meeting. Two other leaders that are meeting, and this was planned before the India 50% potential hike in tariffs, were Modi and Xi. I mean, as we see this sort of reshuffling in trade, supply chains, what is your sense of the extent that we can see maybe closer trade between China and India?
So this is something, obviously the situation is still evolving. I mean, what happened with this escalation of Trump tariffs is a very recent event that happened. So it will be interesting to see to what extent there will be some realignment. But the reality is there's also not a lot of trust between U.S. and China. But we are moving in a world where the big injection of uncertainty of trade policy is really coming out of the U.S. And that will incentivize economies by design are going to want to kind of diversify a little bit more. And, there's a number of countries that are kind of on the receiving end of that uncertainty. I mean, we saw that with Canada, we saw that with Brazil, and now we see that with India. But, again, I think it's just there is a lot of this kind of potential diplomatic outreach to kind of provide a bit of hedging. But the reality is it's it's also quite tough and challenging because U.S. market is very, very important. And there's a lot of gap on trust between China and India as well. So it's not like that will be easily resolved. I mean, a lot of people talked about, maybe with this Trump volatility, maybe there'll be a further kind of realignment of EU and China. And look what we saw there. I mean, it was also very, very challenging. And if anything, given the latest round of agreements, it looks like EU sort of pivoted back to the US in order to get that trade deal and not retaliate. So let's see. I mean, there's a lot of diplomatic outreach and moves, but it's quite complicated.
Yeah, all the bingo cards were largely off if you look at the outcomes currently. Johanna, thank you so much.
Thank you.
Have a great weekend ahead. Johanna, Chua, the head of emerging market economics at Citigroup Global Markets. Going into the open today, Hang Seng Index coming up on your screens. The fix is also out, plus, of course, some open market operations, 7-day repo out of the PBOC. We're down 0.5% on the Hang Seng. Your midpoint of the day, 713.82 against the U.S. dollar. This is the China Show. Good morning.
Couple of stocks to watch in the session today. Among the digestion that's going on is also about earnings. We're seeing some of these biotech plays doing quite well. Innovent Biologics, one of them that we're watching. I think product revenue jumping more than 35%. Dongfeng also another one. But net income, I think going sort of the other direction. SMIC, net income missing the mark as well. And then of course Hua Hong Semis, we're seeing that revenue beating. David.
Yep. So we're looking at those, and of course these three as well have been under pressure. Will the out of the money, if I can use that pun as well, and will the magic carpets lift Cathay Pacific to a whole new world, as they say? Let's go into the open today. Just under 3 minutes away. Futures are down 0.5% on the Hang Seng Index. So it's looking like we're getting an open below the 25,000 handle on the Hang Seng. The open is next. This is Bloomberg. Welcome back and good morning. You're watching the China Show, counting down to the open of trade here. So apart from what you're seeing, we'll get to the China more in a moment, just to mention what's happening across the other parts of the region. I guess to inform us how mixed this session is, Japan is leading the way to the upside. That's lifting the benchmark. To a lesser extent, Taiwan is also seeing some gains. But apart from that, it's a big earnings week in Japan. It will be a big earnings week in the Hong Kong markets next week. But we are getting sort of some samples on that already this week. So, yeah, Avril, what are you looking at as far as the open goes?
I mean, just to add as well, in between this week and the next, we also have those China numbers on CPI, right? A day after trade data. Right. But not sure how much people are reading into that, given how the higher frequency numbers on trading are still, some cause for concern. So maybe this caution we're seeing at the open on the mainland reflects that, people don't want to put money on the table ahead of that weekend. We did see a bounce in metals, though, on the back of that trade data just a day ago. So a bit of a reversal today. Worth noting that the CSI 300 has been underperforming the Shanghai Comp. That's just been going from strength to strength. Can't quite say that at the start of trade today, though. Taking a look at the Hang Seng again, at how it's faring against the backdrop of, everything that's going on in the region. The tariff digestion, along with earnings. It's a down day, 0.5% off. Tech seems to be leading the declines. And then looking at MSCI China, also 4/10s down. We'll get to more on the additions to the China index in just a bit, but just highlighting as well, New World. After saying that it didn't get an offer from Blackstone, that stock is down today. Laopu Gold, that's one of the MSCI China additions, right? Part of, I guess, some of these consumption themes. China Citic, that's another one that was really interesting to see as well. And I think our next guest is going to be talking about how some of these Chinese banks have been even outperforming the NASDAQ. And just taking a quick look at some of the MSCI deletions as well. You had CNOC, you had Hisense, Keelon, Chongqing Brewery, among the stocks that we're watching in the session today, Dave.
Okay, we're looking also at New World, of course, and the massive move up in the stock yesterday. As you can see, we've come off going into the close. We were still up, of course, substantially, and right now we are up in the early goings about 0.5%. So let's call it flat. And as Avril was pointing out there, right, Blackstone has not made an offer for its shares. That's according to New World, and the denial follows this media reports of potential financing that then triggered the massive move up in the stock price. Let's bring in our conglomerates and consumer and gaming reporter Shirley Zhao to help us understand where we are in the story and what happened to shares yesterday and what we know so far about where we are in this chapter of financing and in capital infusion today.
Right. So what happened yesterday is that early yesterday, media outlet Octus released a news report saying that New World's controlling shareholder, the Zhang family, and Blackstone are in talks of a deal which will see the two parties co-investing about $2.5 billion into New World. And part of the deal could involve privatization of New World. And after the news was out, the market basically blew up and New World's shares jumped. And throughout the day, it rose as much as 20% at one point before pairing some gains. But later in the day, New World issued a stock exchange filing, basically saying nobody from the Zhang family or from Blackstone has approached New World about any share offers, basically saying, it hasn't been in talks with anybody about privatization of the company. So that's why we're seeing the stock sort of coming down a bit today.
Shirley, so what's next for New World? I mean, if privatization is not going to be happening anytime soon, what else can it do to raise its liquidity?
So New World has been focusing on developing residential developments, and that could bring in extra cash sometime down the road. And analysts are saying that New World should also focus on selling some of its investment assets. And New World has indeed been doing so. We reported earlier that New World is seeking to sell its 11 Skies project, a mega shopping mall near Hong Kong's international airport. And it's also seeking to divest some of its mainland Chinese investment assets. And analysts are also saying that bringing in an outside investor is also indeed one of the options.
Shirley, thank you so much. We'll be on top of the story, of course. If you're arriving, of course, into or going out, departing from Hong Kong, you'll just see this massive mall, of course, just across the airport. I believe it's Terminal 1, Terminal 2, and then the New World asset. Okay, so we talked about earnings, and I think I want to use Laopu Gold, which Avril just mentioned there as part of the MSCI additions, right? So the shift in sentiments on the left side, Marvin Chen, our Bloomberg senior equity strategist, says that based on southbound flows data and the amount of holdings that they're seeing there seems to be a shift that's shifting away from your new consumption place like Laopu Gold back into what we're calling the Tech 8, right? So China's Tech 8, big platform companies, and that's going into a big earnings week where Tencent reports on Tuesday. Now, this goes into the other big theme that we've observed recently of the Shanghai comp, which is very near 10-year highs, I should note, and as Avril was pointing out, outperformed the CSI. The ratio between the Shanghai comp and the CSI 300, you take a simple ratio, it's now an 8-year high. It actually topped the 2023, early 2024 levels as of the close yesterday. So it's just something to keep an eye on, of course, is what's behind this move and everything else, of course, that we've been tracking into this Chinese market. Right. How do foreigners feel about the Chinese market? That's the other thing, right? Where is the incremental buyer as far as this rally goes? Stephen Sun, head of research at HSBC Qianhai, is here with us on sets. You guys just finished a very long marketing trip in the U.S. Tell us about that. Yeah, how do people feel about this market?
Okay, yeah, David, thanks for having me here. For the past 2 weeks marketing trip in the U.S., I have met with over 42 financial institutions in both the East and the West Coast. And I have to say that the interest level in the U.S. has actually improved very significantly. There was this client meeting. I walked into the conference room with over 20 people there and also over 120 people online. Altogether, we're talking about 150 portfolio managers and analysts from one single institute to listen to my China presentation. It's one clear, evidence interest are coming back owing to the much better performance. For the Hong Kong market since fourth quarter last year, and for Asia market, from July this year.
Okay, so they've clearly taken an interest. They're taking time off their schedule to come. My question next is, have they opened up their checkbooks?
Exactly. If you look at actually the flow, foreign flows were actually witnessing outflows since late March. So i.e., this high interest have yet to be reflected in their portfolio positioning and also capital inflow. But having said that, this is actually good news, right? Because today's bear could be tomorrow's bull. I know they have some lingering concern. First and foremost, it's still this, geopolitical tension between China and the U.S. But also this is because the U.S. market has performed very strongly post, the reciprocal tariff day. And lastly, it's also because of, the deflationary pressure in China and also the ongoing anti-involution campaign from the Chinese government.
Avril?
Yeah, I have a question for Stephen.
Sure.
I mean, to your point about the U.S. side having delivered so far, that's helping the case for U.S. stocks. Maybe that's slowing the process of diversifying into China. But we're also seeing increasingly these concerns about the Fed leadership signals. There's a lot of scrutiny there. Do you think that dents the case for the U.S. exceptionalism and then, makes the case for China?
Okay, yeah. If you look at how exactly, the different type of investors are positioned, I would say, the global funds and also international funds are generally underweighting China. This is because, China is actually small in terms of index weighting. For MSCI World Index, for instance, China only accounts for 3 to 4%, whereas in the U.S., it's still like over 60% of the index. So U.S. capital market and particularly stock market arguably are still where you have, the most innovative companies in the world. And this, really does not change because of, the change of the U.S. administration. So all the innovations are still there. And then that's why, what they're most interested in China is also China's, innovation. I think, in first quarter of this year was, the DeepSeek large language model. And moving into second quarter of this year, it's all about innovative drug companies, in China. The fact that, in terms of global licensing out, China's market share went up further, from almost non-existent 7-8 years ago when Chapter 18A opened in Hong Kong in 2018 to 30% last year and a whopping 47% in the first half of this year. So I think, what the U.S. investors, are interested, it's really the innovative companies, in China.
Do you see that broadening out? I mean, this innovation undercurrent, what's that's benefited so far? AI-related stocks, biotech. Does that broaden out?
Yes, I think we do believe the strengths of innovative drug companies could continue for the rest of the year, owing to very strong business development activities, owing also to the fact that you're going to have a lot of data rate out going into fourth quarter this year. And having said that, I think the high dividend yield space, for instance, China's banking sector, when I pointed out the fact that Chinese banks have actually outperformed the NASDAQ since the beginning of 2024. Many would not believe it, but which is actually a fact, especially for the dual-listed, H&A share big cap banks. I think, the case for these banks is really, what's driving the Hong Kong market is really the southbound, and the majority of that is coming from insurance companies who are searching for higher yield. Despite the fact that after 3 years, our performance yield has been coming down for the banking sector in general from 7 to 8% and down to 4 to 5%, i.e. a dropping of 300 bips. And remind you that the benchmark, which is China's 10-year Treasury yield, during the same period has also dropped 250 bips. So the investment thesis of only this high yield sector is still valid. And then that's why our banking analysts actually upgraded outlook, for Chinese banks. And together with that, we have also upgraded our view for China's insurance sector as well. And not to mention that, this anti-involution campaign will certainly help, traditional sectors like, steel, cement, solar, but also, other new economy sectors like, express delivery, and ultimately will also help the banking sector.
So, Stephen, I want to pick up on that because that's the new buzzword, anti-involution. And I think when you do a survey of at least the people that we've spoken to your point, they think the benefits will first be easily realized in the sort of old sectors, right? Your steel, cements of the world. The jury's still out, though, in terms of the private sector. Now, what is your view on whether or not that does lead to, I guess, an earnings or a margin recovery in, some of the private sector, like EVs, for example, or some of the platform companies, or to your point, delivery companies?
Yeah. We're actually cautioning investors to be more realistic about what this round of anti-involution or supply-side structural reform, that's what I would like to call, can achieve. So comparing to 10 years ago, where the overcapacity are highly concentrated in the old economy sectors, in the investment infrastructure related sectors, in which SOE plays a big role. And then that's why on the supply side, the government can use draconian measures like executive order to cut overcapacity. And then, on the demand side, remind you that, pretty soon, China started this, monetization of shantytown renovation campaign. So very quickly, China has lifted, PPI out of negative territory for within less than a year. So this time around, on the supply side, I would say that, first of all, the overcapacity issue is much more broadly based, including both old and new sectors, new economy sectors like solar, battery, EV, you name it. And which means that the government has to rely more on market forces i.e., self-regulation, self-disciplinary discipline, and also, voluntary production reduction measures like that, i.e., much less dramatic. While in the meantime, our economists, really they're not looking for big, massive, demand side stimulation, to come in the coming quarters. And then the conclusion is that, this time around, the campaign will probably take much longer to lift China out of the, the PPI from negative territory.
So it looks like we'll need to wait or have patience at least, or at least recalibrate our expectations ahead of this as well. Final question for you. You mentioned southbound flows, right? And it's, the market in Hong Kong has reawakened. Capital raising, a lot of the fund flows that have come here as well. Are we overlooking opportunities in mainland China just because of how well Hong Kong has been doing?
Yeah, so those two markets, they're highly correlated, right? Obviously Hong Kong has, rebounded much faster because, Hong Kong has been under depressed valuation for a longer period of time before fourth quarter this year. And then this is really a China by China story, if you will. For instance, the southbound has been almost 1 trillion year to date. So that's keeping, the Hong Kong market rejuvenated. And back to the domestic Asia market, I think, we're also seeing encouraging signs. First and foremost is the national team sort of provide a downside protection. Right, national team like Central Huijin, according to our estimate, probably have bought 200 billion through many ETF subscription in second quarter this year by leveraging the credit support from the PBOC. While in the meantime, for the past months, since July, we're also seeing margin financing activities, picking up. And for the first time for a long time, we're seeing margin financing topping 2 trillion renminbi. And then in terms of, the stock trading account being opened, this year we're talking about slightly below 15 million new accounts being opened by individual investors and close to 2 million accounts alone for the past months of July. And we know that, retail investors really plays a very important role for the domestic Asia market. So with their sentiment being improved and, lifted, we do believe, the Asia market will also play in the catch-up with Hong Kong.
There we go. Margin debt, to the point that Stephen Sun was making, as you can see there, has really picked up recently as well. And we'll see, right? The bottom is in. I think that's fairly clear. The upside is where a lot of people are hotly debating, and of course, which is really a big improvement, by the way, from about 12, 24 months back. Stephen Sun, just now there, head of research at HSBC Qianhai. About 17 minutes into the open here, Hang Seng Index, 0.8% to the downside. A look at markets, plenty more ahead here on The China Show. Good morning. Welcome back. So this meeting later this month is taking on a lot more significance. We're talking about Indian Prime Minister Narendra Modi scheduled to meet Chinese President Xi Jinping in Tianjin, as we were pointing out, later this month, for talks now taking on really added more consequence, given the backdrop of everything else that's going on outside, of course, this bilateral relationship. Let's bring in Min Min Lo, our China correspondent, here with us to talk us through this long-planned meeting. Suddenly is looking a lot more important.
Yeah, so Modi is going to China to attend the Shanghai Cooperation Organization Summit, which is taking place in Tianjin. It's a security grouping led by Beijing, and he was planning to meet with President Xi on the sidelines. But now, of course, it's taking on added significance because of the additional tariffs on Indian goods, because of the purchase of Russian oil. And this is the same threat that the U.S. has leveled on China as well. So it creates a common point of interest for Xi and Modi to discuss, their collective strategy to deal with this. And of course, it's coming at a time when, the relations between the two sides have been quite uncomfortable. I mean, they have their territorial dispute at the Himalayan border. And over the past decade, we have seen this sort of waxing and waning of China-Indian relations over the years. And now I guess the circumstances is calling for them to re-engage with each other again, especially this year. Since June, we have seen at least 3 Indian ministers or officials traveling to China. And that's a level or a frequency of interaction that is really quite rare. And Chinese state-linked media also showing indication that they are willing to embrace India more as well.
Min, you talk about these interactions. When we talk about Russia energy imports, do you think that the threat of these secondary tariffs from the U.S. could jeopardize China-Russia ties in any way?
Yeah, it's a bit of a complex situation now, right? Because Trump is going to meet with Putin sometime soon, with or without Zelensky. And if Putin is able to come up with some sort of ceasefire plan that could appease Trump, maybe that gives the Trump administration a reason not to impose more tariffs on China. But you think about China-Russian relations, diplomatically and financially, there isn't a lot of interest or reason for China to lean away from Russia. Of course, things are a little bit uncertain now because we're counting down to August 12th, and that's the deadline for the truce between U.S. and China. So far, President Xi has not yet announced an extension of that truce, and we are hearing quite sort of conflicting signals from different U.S. officials. You have Howard Lutnick saying, yes, that truce is likely to be extended for another 90 days, but then Scott Bessent saying that no, there could be more tariffs imposed on China. So things are still looking quite uncertain right now.
Min, thank you so much. Min Lo, our China correspondent there on that upcoming meeting taking place later this month. We will take a very short break, but before that, we would look at markets, particularly this rally that stands out quite clearly visually in Japan. Session highs on the Nikkei, 42,000, highest going back to July of last year. Plenty more ahead. This is Bloomberg.
Now for another check of markets, a couple of movers we're watching in the session, including Intel suppliers. This is after Trump said that the Intel CEO should quit. This is following on from China Hawk Senator Tom Cotton raising the Intel CEO's alleged ties with China. So that's become a key consideration, not just for the company, but its suppliers as well. Taking a look at some of these semiconductor-related stocks as well. SMIC, I should say. Net income missing estimates. We're seeing Hua Hong. The revenue guidance was a beat, so a couple of analysts looking a bit more optimistic on that. Aside from that, take a look as well at Wynn Resorts. Adjusted second quarter EPS missing the mark. We also have some MGM China revenue to look at as well. So that's down in the session. We'll have more ahead in the next hour. You're watching The China Show. Welcome back to The China Show. Here's a look at the Hang Seng half hour into the session. We're seeing it extending declines a little, about 0.8% down, broadly in line with the rest of the region. Each shares also coming under some pressure, and all this going into a weekend, maybe investors choosing to be a bit more cautious given everything that's going on, Dave.
Yeah, this really outside of the story in Japan, the lack of momentum that's re-emerged. But I think make no doubt a couple of things. That price on stocks have done well this week, and that's really not a coincidence given the decline we saw in the dollar. So that's obviously going to benefit risk assets. But apart from Japan, which is, by the way, doing very, very well, which we'll get into later on, the rest of the region is doing okay. Despite, if you remove Japan from the equation, I would imagine we'd be flat, if not lower, on the benchmark today. 2% higher, just a couple of milestones that we are maybe going to see these next few days or so if the momentum in Japan continues. So the Nikkei is about 1% away from an all-time high. We're now at about the highest since last year. Beyond that last year level takes us back to basically never. The TAIEX index is also about, I would say, about 1.2, 1.3% away from a record high. TSMC, of course, has helped things along quite nicely, but as I speak, we're now reversing those gains right now. The big story, of course, is in the FX markets. The personnel clarity that we now have in the Fed, the lack of clarity we have over the path of rates. Okay, it's Friday. Bear with me. As far as the Bank of England is concerned, so that revote that took place, and now what does the next meeting look like after they did cut interest rates to a 2-year low in the Bank of England? So this reemergence of uncertainty. Cable, as you can see there, is flat, following quite a decent bounce that we had Wednesday going into Thursday, going into this morning. Right. Apart from that, Avril, we have some breaking news.
Yeah, breaking news out of Israel. We're getting word, according to a statement, that top Israeli ministers have approved the Prime Minister's plan on Gaza, that Israeli army will seize Gaza City, that it will provide civilian aid. This is according to the Prime Minister's office. This is part of a plan to occupy Gaza City. So that's something that we're going to be keeping a close watch on. This, of course, after consultations that have lasted for more than 10 hours. This is how we're getting this decision, according to Axios. And this is part of the first phase of an offensive that could include the occupation of the Gaza Strip. So that's why we're hearing from the Prime Minister's office, the Israeli army, to seize Gaza City and provide civilian aid. Now, of course, we've also been keeping tabs on what's going on in the backdrop geopolitically when it comes to trade specifically. And I think part of why we're seeing the rally, as you alluded to, in Japan today, has really been one thing: earnings delivery from SoftBank, AI profit fueling that recovery. And then we also have Japan more or less confirming that the U.S. is not going to be stacking these tariffs. Then the conversation becomes about China as well, because Besson is talking about how tariffs on them still on the table, joint scrutiny about its Russian oil imports. We have Lutnick separately talking about how that 90-day trade truce is likely. And then bring in as well Trump and how he's expressed some disappointment to the Russian president because that ceasefire deadline as well for the Ukraine conflict, that is today. Have a listen.
Is your deadline still standing for Vladimir Putin to agree to a ceasefire tomorrow, or is that fluid now?
It's going to be up to him. We're going to see what he has to say. It's going to be up to him. Very disappointed.
Right. So these are all interconnected, right, Avril? And I think the interesting perhaps, and if we continue on the progress, if we do get progress between the U.S. and Russia, is some of the issues that have hounded the Indian markets through rupee specifically this week, and maybe China additional levies there. Those things largely go away, right? So I think we have to wait and see how those talks, well, if those talks happen, where they'll happen in terms of neutral ground, and certainly whether or not Donald Trump does make progress on that. I think that's point number one. Point number two is, if you think about it, we had Johanna Chua from Citi earlier on this time in the last hour, and I think she made two very good observations. Number one is, if you take a step back and you look at where tariff rates currently are compared to where people expected them to be during the election, going into the elections, the rate differential that China has over, say, India, which was expected to be the hedge, is actually not that much different. So I think one of the observations there was, because that's the place, China's actually starting to emerge here as potentially less scathed, number one. And number two is, if we do get that 90-day extension that goes into what she says November, which is the month that people talk about the potential timeline for the meeting between the two presidents. So point number one. Point number two, I'll make this very quick. They've started to see payback come through in the data, trade numbers. So we talk about the soft U.S. economy. In Asia, Malaysia, Singapore, Thailand, the data has started to show that, you can't front-load things forever. Have a look.
For the last couple of months, we've actually been tracking a lot of the data to assess where are we starting to see the payback effects on the exports. And where we're seeing it, we first started to see it in Singapore and Malaysia, but then recently we've also started to see quite a bit of payback effect on Thailand as well. So again, the view is that could continue to go. And recently we actually just moved our central bank rate cut call in Thailand a bit earlier to next week, to August, partly because, not just because the inflation was very benign, but just because we think the growth headwinds are growing. So that's something that we need to watch watch for the region, obviously going into the second half.
For a look at how traders are digesting today's headlines, Bloomberg FX and rate strategist David Finity joins me in the studio now. So, David, we want to talk about the new guy, Stephen Miran, right? He'll be there until January next year because that's when Adriana Kugler's term was going to run out. But, I mean, tariffs is a part of the conversation as well. What do you see as him being able to potentially affect bigger rate cuts?
I think at the moment you've said he will replace Adriana Kugler, so you have one more in the dovish camp. But I think you always have to remember the market's already, after that non-farm payroll, the market was already looking basically for a rate cut in September. Market repricing changed very quickly. If you go back about just over a week ago, say 10 days ago, it was like 1, maybe 2, but really more 1 and a bit. Now we're 2, 2.5. So I think the market, if the data comes in weak, the market can go, hey, it's actually go 3. And if you look who's in that camp, I think you say Miran was certainly, he's on the dovish side, but he's only one person who will make up the committee. I think that always has to be factored in. Still led by Jerome Powell, even though we know it looks like he will be replaced at some point next year. So I think we're looking for, okay, it's one more in dovish camp. Where's everyone else lying? And today you have Alberto Muslim, who is a Fed voter speaking. Next week you have Austin Goolsbee, who's another Fed voter speaking. So it's interesting to see what's their take. Have they also gone a bit like Lisa Cook, who is a Fed governor and voting? She's gone, okay, that data could be the turning point. Are they of the same thing? So I think the question is, looking at the numbers in terms of, do we go from 2 to 3 as far as the market's concerned? And we know now that Miran will be one of those numbers for more rate cuts, but we need more in that camp still to fully go. Because if you go back to the most recent dot plot, it was still just 2 cuts. Now, of course, in September, we'll have the market's certainly expecting a rate cut, but then the question is, again, is it one more in addition to that, or is it 2? And I think Miran would certainly be would be in the 2 to 3 camp total, should we say? Is that what you'd expect?
We also have Waller as frontrunner for Fed chair. What is the investor reaction to that? Because, on the one hand, there's been talk about White House meddling, but at least he is somebody within the Fed committee. So does that speak to institutional continuity? What is the reaction in the market for that?
I think the market, the name we knew he was pitching behind the scenes. We had an idea, the market had an idea, said he was quite keen for this rate cut last time, along with Michelle Baumann. So there was an idea that he was pitching for the job, even though his name hadn't been mentioned. I think now the question is, it looks like he is a candidate, but the market will respect him. He's well known. He hasn't always been a dove. He has been a hawk as well. So I think it's well respected, but we now know, look, he's in the dove camp. But again, even if he becomes Fed chair, it wouldn't be until next year, assuming Jerome Powell lasts until the end of his term. So it's still a few months away. So I think even with him, the market's going to go, look, it's still Powell leading the boat, shall we say, at the moment. And what he says, assuming he speaks at Jackson Hole Symposium, will be very interesting indeed. So, how dovish has he turned, given the data? And remember, I would say, we'd still have one more data point to come. There's employment data, and we have CPI next week, PPI, and of course one more employment report. And if that employment report comes in strong, then you go, okay, was one an aberration? I know we have the provisions, but the picture could get a bit cloudier. But certainly at the moment, the recent data we've had between ISM and payrolls has been that growth is definitely, and the labour market is definitely feeling some headwinds, shall we say.
So what makes more sense for the dollar's trajectory amid all this, you think?
I think at the moment, the general sentiment, it's been very bad. Traders have been very bearish on the dollar. It's sort of plateaued a bit when we saw, the data was still coming in quite strong. The Fed was pushing back. Last week's non-farm payroll was a bit of a game changer, without question. And now the market's going, okay, we think it's time to get short dollar again. It's been a bit of a choppy trade because you're doing a summer trade. But I think the sentiment is investors looking for the right place to get short the dollar, whether it be against the euro, is certainly very popular. Aussie dollar's showing some interest as well, and other currencies.
David, thanks so much. There's a lot to digest here, between the tariff impact as well as what's happening with Fed official movements. Bloomberg FX rate strategist David Finity for us. Dave?
Yeah, just to recap the breaking news we got about 10 minutes back here. So the Israel, the Israel Security Cabinet has now approved the Prime Minister's plan to seize Gaza City and also provide civilian aid. And, we've been looking ahead to this possibility the last couple of days or so, this intention of Israel to fully take over Gaza, intention then and now. Of course, we do have more details on this, that it's now been approved by the Security Cabinet of the plan to seize Gaza City and also provide civilian aid. We'll get more details on this on the other side of this break. This is Bloomberg. If you are just joining us right now, some breaking news in the last 15 minutes or so. We now understand that Israel's Security Cabinet has approved this plan, the Prime Minister's plan to take over or to seize Gaza City. For more on this, Michael Heath is with us to take us through what we know so far about the initial developments here, Michael.
Yeah, David, so as you mentioned, the headlines have just passed that the Israel Security Cabinet has approved plans for the military to go into this. It's about 25% of Gaza that they had been keeping out of, because that's where the suspicion is that that's where the remaining hostages might be being held, and obviously they didn't want to put them in danger. Now, the situation has obviously changed where, excuse me, the Israelis believe that negotiations aren't going to get them anywhere, so they're going to try to release these hostages using their armed forces. So that's sort of where things stand at the moment. The Security Cabinet is sort of it's like a kitchen cabinet of a smaller number of ministers that take this decision, which has just happened. I mean, Israel had sort of flagged this, in recent days we've been reporting it as well, but now we have this officially underway.
Okay, the headline also included the Israeli army to seize Gaza City and also provide civilian aid. Michael, do we know a little bit more, anything more on civilian aid aspect of this?
Well, look, there's been an effort to ramp it up. I mean, obviously Israel's come under really heavy international criticism for the state of Gaza and the civilians in Gaza. I mean, there's been horrific images broadcast. So that they are trying to ramp up the aid, and presumably this is a little bit to, in a sense, I guess, to try to head off any criticism of further military action, but also just to try to meet the heavy demand for assistance from the civilians there, who have sort of had to move from one side and the other of Gaza as various operations have gone, and the level of destruction there. So they sort of, everything needs to come in from the outside for them. Now, we don't have any details as yet as to how that's going to look, but the pressure on Israel to ramp up aid has been high. We know President Trump has referred to it. So there is a definite effort there to try to get more goods and more supplies into the civilians there.
Right, and that's not a coincidence, given, of course, that the similar trend that we've seen is the growing condemnation across that we've seen internationally on this. So Michael, I guess the question is, how might this land right now? How might this development, and I guess we can talk about the timing in a moment, but how might this land among in the international community here, Michael?
Yeah, well, look, David, you suspect that it's not going to go down particularly well, just because the idea of using additional force in an area that's built up, where there are civilians, where it's it's just very, very difficult to conduct an armed operation in an area where there's just not much room, and there's a lot of civilians around. There's just going to be casualties. So you imagine that the international reaction is not going to be good. Israel does have the US standing by it, which is obviously incredibly significant. President Trump has basically said that he sort of understands where Israel's at, that it sort of has to do what it has to do, and we saw Bloomberg interviewed Ambassador Mike Huckabee the US ambassador to Jerusalem, to Israel, who basically repeated that view that Israel's got to do what it's got to do. The US has sort of concluded as well that Hamas is not engaging seriously in these negotiations to try to free the hostages, and that if this is the way that Israel thinks it has to go to try and bring that to an end, then they're prepared to stand by Israel's side while they do that. So while it has this shield of the US, it's probably able to resist the international pressure, but no doubt it's growing. We've seen France saying that it's going to recognise a Palestinian state. We've seen the UK say that it will join France, then Canada. Even down here in Australia, the talk seems to be moving gradually towards that direction. So there's some momentum, on the Palestinian side. All of that's symbolic, obviously, if you've got an Israeli military occupation. But in the meantime, the pressure outside is definitely growing.
Yeah, and it did seem, and going into this, it does seem that it's really just a spectrum of really bad options here. Michael, and to your point, right, international condemnation, international pressure, but also we're going into 2 years now, almost 2 years of fighting. Do we have any information on the timing of when this might actually begin, when the military operation might actually begin?
No, I'm not aware at this stage of when it might start. But you'd have to suspect it's happening soon if they're trying to, if they're if they're having late night meetings and these sort of things. The intervention, it's potentially even imminent at this stage. But the sort of what you mentioned a bit earlier about the difficult position that the Israelis find themselves in, it is all round, because at the end of the day, Hamas Israel is copping a lot of blame here, but Hamas is sort of refusing to negotiate. And part of the understanding from Israel, from the US, is that Hamas needs to leave Gaza, and then the war can come to an end, hostages can be freed, and things can sort of develop from there. Now, while Hamas refuses to do that, and while it has the trump of these hostages, we're sort of in a deadlock here, and Israel just basically sees this as its best, or perhaps its only option in terms of trying to free those hostages. And when we've seen video clips and pictures, they're looking at the 20 remaining hostages is what the estimate is out of about 50 who are still missing, 20 remaining who are believed to be alive. They seem to be in a terrible state. As you mentioned, there's been 22 months of conflict. They've been underground for a lot of time. They're moved around. They're not going to be in good physical state at all. So Israel sort of feels like it has to move quickly now.
Michael, thank you so much. Michael Heath there on what we know so far and perhaps what lies ahead, given the breaking news in the last few minutes or so, as, of course, we wake up to a new day there, hopefully, in many ways, this Friday. A look at markets, plenty more ahead. This is Bloomberg. Welcome back. You're watching the China Show. Let's get to this massive intel story. And certainly one thing that we woke up with here in the Asia Pacific with pressure to underscore that point from President Trump, calling for the CEO to immediately resign over what the president calls conflicts of interest, injecting really fresh turmoil into a company that, by the way, is also struggling fundamentally when you look at the losses, relevance as far as the AI conversation goes. Min Min Lo, our China correspondent, is here with us to talk us through what exactly are the conflicts of interests that are being raised here. What more do we know about that?
Well, President Trump didn't exactly spell out what the conflict of interest is, but we know that a Republican senator had recently written a letter to the board of Intel questioning the CEO's ties to China, his ties to the Chinese military, and his investments into China as well. And this is in relation to his role before he became the CEO of Intel. He was running Cadence Design for over a decade. That's a U.S. chips design company that had sold products to a Chinese military university, and at the time it had pled guilty to violating some export control rules. At the same time, Mr. Tan, the CEO, he also has his own venture capital firm that invests in many countries, including China, including into many Chinese chip companies. So potentially this is where the conflict of interest could come from. And the question is whether or not Intel did do its own due diligence to find out, before hiring the CEO.
Okay, what's the other side? Has Intel responded?
Yes, Intel has released a statement saying that they are still very committed to U.S. national security, that they have manufactured for decades in the U.S., that they have invested billions to build up infrastructure in the U.S., to invest in R&D and manufacturing. But at the same time, we know, for example, that Intel had gotten about $8 billion in funding from the CHIPS and Science Act, and a big part of that was to build a plant in Ohio. But the company had said that it would delay those plans to build out the plant until 2030s. And perhaps this is something that could have angered Trump, because they did take, this is taxpayers' money that they're taking, and they do have an obligation to answer to that.
Okay, any lessons that tech CEOs can learn? And obviously we don't know how this is going to be resolved at some point, but based on what we know so far, any
I guess one of the takeaways that you can take from this for tech CEOs is perhaps this CEO's failure to build or cultivate a personal relationship with President Trump has come to bite the company in its back. Because you look at what NVIDIA CEO has done, even Chua from the TikTok as well. They have been, lobbying the government and really trying to build relations with President Trump. And right now, it is not clear which is the bigger worry, whether the company is going to cave into Trump's demand or the political repercussions of defying it. Because this CEO, he was handpicked because of his deep connections and expertise in the industry. And many analysts feel that the things that he has done to turn the company around had been right at the beginning, when he sort of gone to this cost-cutting regime and restructure the fabs. And so right now, there isn't really a clear indication of who else can step into his shoes if he does step down.
Min, thank you so much. Min Lo, our China correspondent there on the latest. Right, one group of stocks that we've been tracking about an hour into the session, and you'll understand why in a moment when you see all the substantial gains we're seeing in the likes of Innovation Medical Management, Nanjing Panda, Electronics, Limit Up in some cases here. So these are brain technology stocks. And effectively, the China's Ministry of Industry and Information Technology on Thursday said that China will accelerate the use of brain-computer interface products in industrial manufacturing, healthcare, and consumer sectors by 2027. You have a policy push on upgrading high-end manufacturing to include cutting-edge technology such as this. And as you can see, markets are moving with it for now. We'll see what happens, of course, and whether or not plans come to fruition. Markets do need just only bits of information to run like this. Plenty more ahead. This is The China Show. It's 11:29 in Tokyo, which means we're about a minute to the lunch break there, and it's been, as you can see, quite a morning in Tokyo. We're in the thick of earnings. I think yesterday on the Topics Index, we've had like 15% of the Topics reporting earnings. Some 300 or so on the Topics are reporting today. So on top of anticipation ahead of those earnings, we're also dealing with, at least as far as the market moves today go, market reaction from yesterday. So whether that's Sony, SoftBank, we'll get to that in a moment. Toyota reported after the bell yesterday, I believe, or towards the afternoon part of the session. And as you can see, that's enough to lift the Nikkei to almost 1,000 points, right? 42,000 is a level that I believe we haven't reached just yet. We're within 1% of an all-time high, I believe, there in the Nikkei 225, which is the level we last touched back in July of 2024. The Topics is slightly behind. It's perhaps down to index constituency. But apart from that, let's get into the earnings right now. In fact, let's start things off with SoftBank. SoftBank Group specifically here. So the company's back in the black. That's after reporting a quarterly profit of $2.9 billion. That's more than double the average analyst estimate. This was partly driven by gains in NVIDIA and TSMC, as well as various startups that it's backed. Now, it's a boon, obviously, to the founder, Masayoshi Son, and his bets on AI. SoftBank slated to invest $30 billion in OpenAI and is buying chip designer Ampere for $6.5 billion. Right, let's have a look at shares of Sony on your screens. Two-day look, let's call it 9%, 4,000 yen a pop. Second day, of course, extending those gains that we've had already from about midweek. So the company raised its profit forecast for the current fiscal year. Morgan Stanley says there is room for upside to Sony's game and network service earnings. Okay, so that's 2 down. Let's talk about Toyota now. So President Trump's tariffs are starting to affect corporate earnings, and really one of Japan's biggest names, if not one of the biggest, is feeling the pain. We're talking about the car maker, as you can see on your screens, projecting nearly $10 billion hit to its bottom line for the year. In fact, it just lowered its annual guidance. For more color and, more importantly, context, Reed Stevenson, our senior editor, is with us to talk us through Toyota and, broadly speaking, what the earnings season has been so far in Japan. And we're bringing in, of course, as well, our colleague Hideyuki-san is there, was both joining us out of Tokyo. Who do we begin? Eeny, meeny, miny, mo. Reed, you take this one. You win. Reed, take us through the Toyota story. What do we need to know?
I mean, the $10 billion you just mentioned, that translates to 1.4 trillion yen. That is essentially the reason why they lowered their full fiscal year outlook to 3.2 trillion from 3.8. And essentially, to a certain extent, Toyota had been absorbing some of the tariff costs, but now with the clarity, they've calculated the impact and decided to take that hit to their forecast. But what you also have to remember is that, they actually outperformed in the latest quarter. During the April to June period, they actually reported 1.2 trillion yen in operating profit. That's well above what analysts had been projecting. And so, to a certain extent, there is underlying strength there. And what this probably sets us up for is a beat on the earnings later on when they report the full year figure.
Right, and Reed, just on the tariff front, this is obviously a global company. How is that showing up in the Toyota narrative, Reed?
Yeah, I mean, to a certain extent, they saw this coming. They've shifted a lot of production to North America, particularly for the RAV4, which is a very, very popular model there, the hybrid version of that. And obviously, Toyota has mastery of the supply chain. They make 11 million vehicles a year, and so I think they've done everything they could to sort of prepare for this eventuality. And I think the main point here is that there is clarity. We now see that in the numbers. And then the only job is to really try and outperform that. At least, it's an exercise sort of in managing expectations as well.
Oh, yeah, the secret to life, really. Reed, fantastic. Thank you so much. Reed Stevenson there, our editor in Tokyo, on the Toyota side of the conversation. One to watch there, right? The broader story on earnings, let's get a sense of where we are right now as the earnings season is coming to an end and what the overall takeaway is. And I'll put that question to you, Hide. What's the takeaway you think that market should be walking away from here? Walking away with, rather.
Hi, so if you look at the numbers in the aggregate, the profit growth has slowed, and in fact, we're likely to see the first year-on-year fall in operating profits since the COVID time. Now, the main reason is, of course, the car makers, because they have been suffering from tariffs. So if you look at the positive side, if you exclude car makers and steel makers, people say the earnings are pretty good. But on the other hand, car makers are still a very important part of the Japanese equity market. And despite some clarities we're having on tariffs, many investors still unsure exactly how much their shares might recover, because their share prices have recovered massively after the announcement of US-Japan tariff deals late last month. And that alone is not enough to make investors bullish about the outlook of car makers at this point.
Yeah, I want to pick up on that, Sano-san, because to your point, you're correct. The reactionary function of investors here has almost been, I think we put data on this out, fantastic work, by the way, has been disproportionate if companies had missed expectations. What have we seen so far as how investors have punished those stocks?
Yeah, exactly. And I guess the chip making sector is probably the best example of this. Tokyo Electron shares have tumbled after its earnings disappointed, and also we have Shin-Etsu Chemical, which makes wafer for semiconductors, its shares also fell massively after its earnings disappointed. And what this tells seems to be that basically companies that have very high valuations are very vulnerable at this point. And even if you look at the overall market valuation, the Topics is now trading at 50.6 times the earnings, and that's quite high. I mean, it's not the highest level, but it's I would say it's somewhere between 20 to 30% percentile over the last 10 years. So, and last time when we had a valuation like this in 2024, we had a big crash. So you could say that basically the market is already pricing in very strong earnings, and therefore even the slightest disappointment could lead to a very big fall in share prices.
The offset, and this might be something else, but it's a positive thing. What's the latest on share buybacks? Because that might be provide a sliver of solace for investors who are worried, to your point, over rich valuations.
Exactly. Share buybacks have been one of the strongest support for the Japanese equity market, as you mentioned. And so far, the numbers is almost in line with last year, so it's almost flat. And it's flat from record levels, so it's not high, but we haven't seen strong growth we've seen over the last few years. So share buybacks being flat from last year, investors are not particularly impressed after having seen very strong growth. And many companies are also, according to analysts, many companies are also becoming a bit cautious about increasing shareholder return precisely because of huge uncertainties on the global economy, including tariffs, but also many companies are also worried of possible slowdown in the U.S. economy because of the impact of tariffs, etc. So we are unlikely to see a big growth in share buybacks at this point. I mean, it's already at very high level. So one would think that staying at that level would be probably a good news, but it's not likely to put additional support for Japanese equity prices.
Okay, and that was really good news. Hideyuki-san, thank you so much in Tokyo for us wrapping up really the key themes in the earnings season in Japan as we move into the latter part of that, if not towards the end, of course, of that, at least this season story. Okay, let's stay on earnings, though, because one market that is about to enter the thick of earnings in the next few weeks is China. And in fact, we've had already some big names report this week. Recently, and when I say recently, yesterday, and we have some context this morning from management on some of the earnings calls. These chip makers, SMIC, number one. Number two is you have Hua Hong Semi, both companies out with earnings on Thursday, both missing estimates. Hua Hong's guidance for the current quarter was actually higher than consensus. Meanwhile, SMIC here says the current demand for its products is actually higher than what it can actually supply. But the CEO, Qianhai, thinks that some clients have actually switched to other suppliers because of concerns over tariffs. Now, our next guest was, in fact, listening in on this earnings call there when those comments were made. Wang joins us, Research Director for Semis, Supply Chain, and Emerging Tech at Futurum Group, joining us from Washington. Ray, good morning from the Asia Pacific. I know it's late, so thank you for staying up. You were on the call. What stood out to you there, sir?
Thanks for having me. Yeah, I think the biggest takeaway or the most notable comment I kind of gained in the earnings call is I don't think the management addressed well enough in terms of the tariff impact, in particular the tariff impacts on the Chinese customer. And we have seen the comments from the U.S. administration in terms of the 100% tariff and also the unclear 232 investigation on semiconductor. I think it's because the comment didn't address well enough on the concern on tariff tariff, and you see market react negatively after the earnings call. But in terms of kind of domestic demand, I think domestic demand will still exceed the supply in the short term, and that's the comment I'm being witnessing in other semiconductor companies.
Right, and the context there was they pointed out demand is likely to outstrip supply. Where are we seeing demand incrementally pick up, Ray, in your view?
Yeah, I think so it's sort of broad, right? For the automotive, and also I think the smartphone is also doing okay. I think for the both part, and I think one important thing is I was trying to figure out how AI will impact the demand for SMIC, which I think for now still unclear, but I think for automotive and kind of smartphone, it's continuing to doing well and kind of broader consumer electronics.
Okay, and what about this slow narrative of locally made chips replacing some foreign names? Where do you think we are on that story?
I think it's still too early to say for now. I think we are seeing expanding capacity and continued technology advancement for Chinese chip makers. But I think for now, if you look at the foreign chip makers, whether it's for the power semiconductor or for kind of other semiconductor types, I still think foreign chip makers still will have notable presence in China.
Okay, now I need to ask you about not NVIDIA per se, but this détente and this pause in let's call it tensions specifically on chips, H20, right? This is a two-part question for you. Do you think China needs H20 chips currently? Do you think they want H20 chips in the future?
Well, I think both answers yes. Number one, the AI companies and the hyperscalers right now in China will definitely prefer NVIDIA's H20 over any domestic offerings so far, given the better memory bandwidth that offered by H20. And I think in the future, it will very depend on how Chinese domestic chip makers will develop, whether they can outpace the current H20 capability, right? If they can outpace the capability and they can expand the capacity to supply domestic AI players, that will be the point that they don't need H20. But I think for now, and looking forward in short term, H20 will still be very important for China's AI development and its compute demand.
Okay, so when we talk about when, I'm curious if it's a question of when or if, Ray. So give us I know it's difficult to project, but give us an informed projected time frame of when you think those capabilities are available domestically and they don't need to source it outside, whether that's from NVIDIA or somebody else.
Yeah, if we are to talk about having the chips that better than H20 currently, I will probably say 3 to 5 years. But if you want to have offerings that is better than NVIDIA overall, and at the same time to have the capacity, I think the gap is at least 5 years. And I don't want to predict even further, just given all the uncertainties and how technology have developed in a way that there's no way you can predict.
Okay, yeah, there we go. Futurum, helping us look into the future room. Ray, thank you so much. Ray Wang in Washington there, Research Director for Semi Supply Chain and Emerging Tech at Futurum Group. Thank you so much for joining us today. Thursday, of course, in his time. Quite late there. Thank you so much. All right, if you missed that specific conversation or others that we had here on shows in the last couple of hours, TV Go is the function you run. And yeah, you can also get into some of the securities and charts and commentary that we've gone through here in the show. So check it out on TV Go.
India will never compromise on the interest of farmers, fishermen, and dairy farmers. I know personally I will have to pay a heavy price for it, but I am ready for it.
That was the Indian Prime Minister Narendra Modi there pledging to really do what it takes to safeguard your interests, specifically of, really couldn't be more clear, Indian farmers, for example, there amid these tariff pressures coming through out of the U.S. President Donald Trump. Okay, we also discussed trade with Brazil's president. Is set to meet Chinese President Xi Jinping later this month, so the docket is quite busy there as far as Indian foreign relations go. Let's bring in our government reporter, Sudhi Ranjan Sen, is with us to take us through. Sudhi, why don't we start with Brazil and the significance of those talks between Lula and Modi? What's the context there you think we should be taking away?
Well, I mean, this was a pre-scheduled call. I mean, it was not, a call that all of a sudden the two leaders decided to talk. This was decided that they would talk. Mind you, Prime Minister Modi and Lula just met a couple of months ago. So they're just carrying forward the discussion. But what is important is in between, we've seen tariffs being slapped across, and India and Brazil more or less on the same page. BRICS, which both India and Brazil are members of. President Trump has criticized BRICS, branded it as an anti-American organization, threatened to, punish countries that are part of BRICS. The interesting takeaway for me, at least, in the talks is from the readout coming out of Brazil. There's a clear mention that the two leaders spoke about trade, tariffs. That is the big takeaway that is there. Whether there is something more coming between the two countries, not clear yet. But the very fact that the two leaders are speaking on the fact on the U.S. tariffs is very, very important, and something that we need to follow.
Well, yeah, before actually, why don't we talk about that right now, Sudhi, before we talk about this upcoming meeting with President Xi Jinping? What do we know about how India is planning to handle U.S. tariffs or penalties, depending on, I guess, how you look at, the framing there?
Well, I mean, there are a raft of options that are being considered in India, and India's approach is a very cautious, measured approach that we are seeing. We've seen a couple of angry statements coming out of India, pointing fingers back at the European Union, the US, saying that the tariffs and the penalties are unjustified. But having said that, there is a much more cooler head, so to say, when deciding the next course of action. Retaliation, of course, is a possibility, but it doesn't look like that India wants to go down that route. Rather, it seems like there is, the discussions that are going on, and this is what my colleagues Shruti, I, and Ruchi, we have reported, is India is talking about what else can we do. The bottom line being that India, like the United States, is quite keen to get the trade deal done. And therefore, what can we, what can both sides, or what can India do, so to say, to get the negotiations going? Trade negotiators from the US are expected later in the month. That stands despite the acrimony that is there. So I would say, there are 21 days that President Trump has given. So it's going to play out. We don't yet, see India retaliating or relations completely breaking down.
And Sudhi, just quickly here, speaking of end of the month, this upcoming meeting between Prime Minister Modi and Chinese President Xi Jinping is taking on a lot more significance because of just the context you've laid out for us. What can we expect there?
Well, the first thing that we can expect is India and China are going to speak, discuss, and perhaps the two leaders are going to get the relationship normalized even more. The relations were bad because of the border skirmish 5 years ago. It's being normalized. They've already decided to start direct flights, ease visas. So we can expect measures like this, easing tensions, normalizing the relationship. That's what that's what is most likely going to come out of the bilateral meeting.
Thank you so much, Sudhi Ranjan Sen, our government reporter, with the latest on what to watch moving forwards. We'll get you guys a preview in a moment here of the things that we're keeping an eye on going into the weekend here as far as Chinese markets go, including the inflation print, which comes out on the weekend. Right, before we wrap up the show, going into the weekend, a couple of things we're keeping an eye on, certainly as we go into the weekend. Specifically, inflation numbers are coming through here. This is out of China, and when you look at the forecast, not encouraging but the median forecast is for a slip back into negative terrain on the CPI front. We'll see whether or not that changes, of course. Chinese media, when you look across some of the reporting, do suggest that there is a window for a triple R cut. Not necessarily today, but I guess moving forward. Activity numbers are coming through going into next week. And of course, it's also a very big earnings week. We'll get to that in a moment here. Now, as far as the inflation print is concerned, CPI is expected to go from 0.1 actual last month to -1. And PPI, as you can see, is expected to come off a little bit from the bottom of -3.3%. That's due around this time tomorrow. Speaking of earnings, very quickly, a glance at what to watch. Tencent is reporting next week. Apart from many of the big names where we get into the thick of things as far as Chinese tech goes, JD.com, what have you. Okay, right. Apart from that, before I go, just to recap the breaking news this hour, which I imagine our colleagues of the next few hours will dig into even further. The breaking news that Israel's Security Cabinet has approved the Prime Minister's plan to seize and go into Gaza City. We still have no information on the timing of that, but certainly that is more than an indication of preference. Let's put it that way. Plenty more ahead. This is The China Show.